Our morning call. Hope you're having a good Friday morning. Well, we'll just run you through all the stocks that we're tracking in our special top 10 segment. And to help us analyze it further, we're joined by Siddhartha Khemka, Head Retail Research at Motilal Oswal Financial Services, who joins us on the show. Hi, Sid. Morning. Thanks so much for joining in. Well, the stock of the last hour yesterday was Zee Entertainment. They've got the go-ahead from the NCLT. And now, in fact, the valuation as well you'll give it, the market capitalization could be far higher from what we saw prior to that order. But at around 280 rupees, how much of the good news is in the price?
Yeah, very good morning, Nigel. Thanks for having me on your show. So if you look at the entire street was waiting for this event to happen, which was the biggest overhang on the way ahead for Zee-Sony merger. And now with the NCLT approval, we have already got the exchanges and the other shareholders' approval for the same. So I think that paves way for the merger of two large entities and making it one of the largest media powerhouse in India. Going forward, there would still be some concerns with regards to the management of the merged entity, given that the regulators have kind of come out and they have come out and said that the Zee management cannot continue as directors. So we'll have to see on that. So that is a little bit of overhang, but I think there are a lot of growth opportunities. We see that the merged entities enterprise value, even if we adjust for the 1.6 billion cash infusion by Sony, stands at a good 358 billion rupees. And we see that the combined entity can generate revenues around 190 billion rupees with a 10% blended margins. Which kind of, so at current valuations of EV/EBITDA of 19x, we see that there is a negative value for the OTT business, which we don't think is justified. Even if we give a zero valuation for the OTT, we believe that the current valuations do not capture the strong growth opportunities and the content investments. So we think it's a good growth opportunity. There could be further upside, and the target price revision would keep happening as and when the synergies keep flowing in. For now, we have upgraded our target price from about 280 to 320, and we believe that this is a good step for the Zee-Sony merger going ahead.
Okay. Siddharth, hi, good morning. I wanted your thoughts on HCL Tech. That's a pretty large order that they've won, right, from Verizon, over $2 billion. Of course, it's spread over 6 years. But the stock, if you notice in the last 1 year, from a low of around 900, now it's back to about 1130. Is the risk reward favorable for investors, long-term investors?
So, Sonia, I think this is a good deal that they have announced, a 2.1 billion deal from Verizon to provide the management network services to Verizon's client, which includes the post-sale implementation and ongoing support, which would be a period of 6 years, and also includes transition of some of the employees from Verizon to HCL Tech. We see that this can be a potentially good large order, and the 2.1 billion is a minimum committed value and can potentially increase if the venture performs well. So our initial calculation shows that the deal could add about 110 basis points of additional revenue to FY24 and about 230 basis points additional revenue in FY25, and which would majorly ease the concerns of investors with regards to the company's FY24 revenue growth guidance, which is in terms of 6.5 to 8.5% growth Y-on-Y. So I think largely these deals kinds of paves way for the investor concerns to kind of get allied and definitely looks good. We currently have a buy rating with a target price of 1280, which is kind of 10% upside, but definitely we'll have to have greater working on this deal and could lead to further upside. So I think risk reward is still favorable. The valuations for HCL Tech is kind of comfortable, and it's a positive news for HCL Tech.
Siddharth, hi, good morning. Any results, any stocks based on results, etc., you want to highlight, which your team, etc., is very excited about?
So yeah, Prashant, good morning. So I think some of the lot of result season going on. Grasim came out with very strong numbers with a strong recovery in the core VSF business. We saw the chemical business operating profit margins also improving sequentially. So overall EBITDA growth was much ahead of our expectation. Operating margins of 10.8% was again much ahead of our expectation of 8.2%. As I said, the beat was driven by the VSF segment that kind of see a good EBITDA per kg at almost 20 rupees compared to our expectation of 14 rupees. So overall, we see that it's a strong recovery, especially in the core businesses of VSF and chemicals. We see that margins in both the businesses have now almost bottomed out. Lower input cost aids improvement. So it's a good in a commodity business when you see the margins kind of bottoming out, improvement, the cycle. So that's kind of a good sign for the business. We have a target price of 2,100, which is a good 15% upside from current levels.
Okay, thanks a lot, Siddharth, for that. Just stay on. We'll come back to you in a bit. We have plenty of other questions to ask you, whether it's a lot of these auto numbers which have looked very good. But in the meantime, we also have a management joining us now. Healthcare Global Khemka has been sitting with us. Siddharth, the auto ancillary space has done very well this time, barring a few cases here and there. I mean, just case in point, right? Endurance Tech, very strong numbers, big pickup in the EV business. And if you look at the stock as well, I mean, it's gone from 1,100 to 1,700 in just the last 6-8 months. What do you do here?
Yeah, so Sonia, if you look at, I think auto was one sector where we were expecting a strong recovery in terms of earnings growth and some of the auto anchors. We also saw the numbers from Motherson, Samvardhan Motherson also coming at very strongly. So overall, if you look at barring the CV side, where because of the pre-buying in the Q4, the growth was a little bit less, but in terms of if you look at the other segments, growth has been pretty strong. Coming to Endurance Tech, performance was in line with our expectation. Growth has been ahead of the industry, especially in the domestic market. The India revenue grew 13%. If you look at segment-wise also, the growth has been pretty strong. In the three-wheelers and the passenger vehicles segment, overall net profit was pretty strong at 47% growth. Overall, I think we have a positive view on endurance and a buy rating. There is a con call today at 10 a.m. post which we could revise our target, but I think within the auto space, endurance sits pretty strongly in the auto ancillary space with a diversified presence across two-wheelers, three-wheelers, and the passenger vehicles. Hence, we like the stock. Currently, we have a target price of 2,000 on endurance.
Okay, what we'll do is we'll take a quick commercial break here. But as we do that, let me quickly tell you what's lined up over the next half hour of the show. We'll get you the top stock picks for the day. Our technical experts will be joining in just a bit from now. And before markets